Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Hey, this is Stan the Annuity Man, America's annuity agent licensed in all 50 states. That's including yours. And would love to have you as a client. If you're a client out there listening, thanks for joining me once again on the Annuity Man podcast. Today's topic is a really, really important one. They all are important, but this one's very important because I get a lot of calls concerning confinement care riders and income doublers and long-term care and things like that. Long-term care is kind of the gorilla in the room for a lot of people. But we're going to cover a lot of the sales pitches that are out there. Most of them are not good, not detailed enough for you to make a really good decision. First of all, long-term care. Let's talk about long-term care. What is long-term care? Long-term care is a health insurance product. You have to have a health insurance license to sell it. And fixed index annuities with income riders, which is what most people are buying for these long-term care doublers, riders, whatever, that's a life insurance product. So the best coverage on the planet for long-term care is still traditional long-term care. I don't sell traditional long-term care, but it's still the best coverage on the planet. My mom has it. My dad had it. I didn't sell it to them, but they had it. And I thought it was great because it's a pure transfer of risk to cover for long-term care. Now, the argument is, Stan the Annuity Man, I keep, putting money in. I'm not sure I'm going to use it. Well, that's the same as fire insurance and car insurance and homeowners insurance. I mean, insurance is a transfer risk, so long-term care is as well. Now, if you really wanted to see a pure long-term care product, a health insurance product, the best ones out there, I do refer that out to one person who's the best person on the planet for pure and traditional long-term care. So if that's the case, then I have no problem, shooting you to him and he can help you. But if you are trying to make a decision if you need to attach an income rider to a fixed index annuity for long-term care or confinement care or enhanced benefit payouts, then this is your podcast because I'm going to go over the details in English, not lawyer speak, on how to understand, what you're hearing. Now, the sales pitch that's out there sounds pretty good. Free long-term care. You don't have to go through any type of medical testing. It's a guaranteed issue, et cetera, et cetera. Well, the only problem with that, it's not true. It's not long-term care. It's confinement care riders or enhanced benefit payouts. Now, what does that mean? When you buy an income rider, let's talk about an income rider. What's an income rider? It's an attached benefit to a policy that you can use only for lifetime income. So typically, these income riders will have a high percentage growth amount during the deferral years before you turn on the income stream. and some people think it's yield, but it's not. Jimmy Carter's not in office. You're not getting those type of yields anymore. But it'll grow by that percentage, and then that amount within that income rider account, which is a separate calculation from the accumulation value, you can use that to determine your lifetime income stream. Now, some, not all, income riders offer what's called an enhanced benefit payout. That's what they're calling them. Most carriers are calling these doublers, whatever, they're calling them enhanced withdrawals or enhanced benefit payouts. And you have to be aware of what type, and typically there are two types. One is called confinement care, and confinement care is what it sounds like. You have to be in a nursing home for a specific period of time, typically 30 or 60 or 90 days, depending on the contract. They're not all the same, so you have to read the details. And if you're really interested in those, you need to ask the agent for a specimen policy to actually read what's in the policy. Don't just believe the agent, okay? But confinement care, you have to be in the nursing home for that specific period of time that's listed in the contract. And then once you're there in that confinement care setting, nursing home, then the carrier will take that income stream amount and typically they double it, enhance it. Most of them are doubling them right now, okay? So if you're getting $5,000 a month, just as an example, and you go into a nursing home and you stay there for the allotted period of time that triggers the enhanced payout, then you will get $10,000 a month for typically 5 years. That's the maximum that most carriers are. This isn't all encompassing, they're all different, but I'm giving you a 30,000 foot view of how they work. So most double that income stream for 5 years. Now you're sitting there going, that sounds great. I mean, they're doubling the income, right? Well, yes. Okay. But just remember this little Southern saying that I came up. Most of you that follow me, I'm always coming up with sayings like will do, not might do, and all this stuff. For these enhanced benefit riders, just remember this. When you get sicker, you get your money back quicker. I'll repeat it again. When you get sicker, you get your money back quicker. All income streams from annuities, regardless of type of annuity, is a combination of return of principal plus interest. So if you are in a confinement care setting and you qualify for the doubling effect or the enhanced payout, whatever that is, it might not be a doubler, it might be a percentage payout increase. But the bottom line is you're getting more money back. You're getting more money back quicker because you're sicker. You're actually proving to the annuity company that your life expectancy is less, which means they're going to give your money back quicker. Does that make sense? Now, the other way that you can qualify for these enhanced benefit payouts, and you have to make sure you know which one you're getting. Obviously, if you deal with me, Stan the Annuity Man at theannuityman.com, or all of my experts there will tell you. The other is called ADLs, which that's the daily living, if you can't do 2 of the 6 daily functions of life, which is stuff like feed yourself, clothe yourself, bathe yourself, those type of things. There's 6 of them. Bottom line is when you can't do 2 of the 6, life stinks. I'm serious. I mean, clock's ticking. And a lot of the stats that I read is when you can't do 2 of the 6 daily functions of life, then you're going to live an average of 3 years and a maximum of 7, which interestingly enough coincides with the doubler, right? Because most of the carriers only double that payment for 5 years. So if the enhanced benefit payout rider attached to the indexed annuity that you're looking at is an ADL qualification, so you can't do 2 of the 6 daily functions, and a doctor signs off on that, and you go through the proper steps, then they're going to enhance that payout. And typically it's doubled for 5 years. Now, let's cover a couple caveats to that. When the accumulation value, remember that's that index option value that we really don't care about, we only look at the guarantees, but when that accumulation value goes to 0, then the income stream doesn't double anymore. It goes back to the original lifetime income stream amount. I'm going to let that sink in a little bit. So in other words, remember when I talk about indexed annuities with income riders, I draw a line down the middle of a blank sheet of paper. Left-hand side is the accumulation value side, which is the income option, the call option on the indice, typically the S&P or something like that. Right-hand side is the income rider side, which is there are 2 separate calculations. But when you take income from an annuity, that income stream is subtracted, that amount, dollar for dollar, from both sides of that ledger. So what I'm saying is when the accumulation value is at 0 on the left-hand side of the ledger, there's no more doubling. And if the accumulation value is at 0 when you qualify for the 2 of the 6 ADLs, or if you're in a nursing home, there is no doubling. Give you an example. Let's just say you qualify for the doubling and you go 2 years with that doubling of income, and then the accumulation value hits 0, you automatically go back to that lifetime income stream amount, not the doubling amount. So 0 is going to trigger you back to the lifetime income stream guarantee that you originally purchased, and you're not going to get the enhanced payout, if that makes sense. I know this is confusing. That's the reason you need me and my people at theannuityman.com to walk you through this. But for the people that are out there that cannot qualify for long-term care, and annuity companies and life insurance companies and health insurance companies, they want to insure healthy people and young people, right? They don't want to insure people that have issues. That's just the bottom line. So if you can't qualify for traditional long-term care, which still is the best coverage out there, then maybe these enhanced benefit riders are your only option. Or if you're the person out there that's smoking a carton of Lucky Strikes every week and drinking a bottle of Jack Daniels every other day, first of all, God bless you, you're killing it, right? Or you're killing yourself. Then this is your only shot. This is your only coverage. In a perfect world, these confinement care riders, enhanced benefit payout riders, whatever you want to call them, they should be used as secondary coverage, not primary coverage. Never, ever, ever, ever allow some Yahoo agent or advisor to tell you to cash in your traditional long-term care that you've been paying on, the health insurance product. That's the best coverage. Never have them tell you to cash that in and buy their indexed annuity of choice with this confinement care rider. Don't do it. This only applies for secondary coverage or if you can't get coverage at all. Nod your head out there that you agree with me, that you understand what I'm saying. Traditional long-term care is still the best coverage. My mom, who lives in St. Augustine, Florida, I live in Florida and Nevada, depending on the weather, right? My father passed and they had long-term care and he didn't get to use a lot of the benefits. So when my mom, who's 80, her comment was, should I keep my long-term care? Yes, it's still the best coverage. Period. Because, of course, she went to one of the bad chicken dinner seminars and some yahoos up there talking about free long-term care riders, which, as I said earlier in the podcast, that doesn't exist. Remember, annuities are commodity products. You own them for what they will do, not what they might do, which is the contractual guarantees only. They're transfer of risk products. And they really solve for four things. The acronym's PIL: principal protection, income for life, legacy, and long-term care, confinement care. I'll do that again. The acronym is PIL. P stands for principal protection. I stands for income for life. L stands for legacy. And then the other L stands for long-term care / confinement care. Now, if you really want long-term care, then I'm going to refer you to my friend who's the number one expert in the country. I'm the number one expert in the country with annuities. He's the number one expert in the country when it comes to long-term care. I don't go there. I don't do that. I mean, I'm a specialist at what I do. He's a specialist at what he does. But if you know that you can't qualify, or if he comes back and we can't get you qualified over there with his products for long-term care health side, then maybe these confinement care enhanced benefit products are for you. Now, if you said, hey, let's look at that, then we're going to quote all carriers like we do with everything, because even these products are commodity products. At the time of this recording of this podcast, there's less than 20 companies that actually offer these riders, these enhanced benefit payouts. Now, if you come to us and say, I'm interested in that for me or me and the spouse, me and the partner, as a secondary coverage or as a primary coverage because you can't get the other coverage, you're out there smoking the cigarettes, right? Then we're going to quote all of those companies. I don't have agendas going into a quote. I'm not steering you to a specific company. I don't go on incentive trips. I don't do that. I'm going to point you to the highest contractual guarantee for your specific situation. And remember that most of these confinement care riders, enhanced benefit payouts, they require a doctor or a healthcare practitioner that they approve to certify that you're either in a nursing home or, you're disabled. You can't do 2 of the 6 ADLs. So, it's just not something that's automatic. There's some steps that you have to go through. My staff, my team handles that if we get to that point. That's a sad point, but some of our clients are at that point and we get that call and we handle it for you, period. So just understand, if this is the direction you want to go, we're going to go very slow with you during the process. We're going to educate you in the process. Part of the reason I'm doing this podcast is just people are just yelling at me saying, hey, we need more specific details. It's one thing to read about it. It's hard to read about it. And I've written articles about it as well. But to talk about it like me and you are having a conversation right now is a lot easier. So the bottom line with all annuities that are sold at the Bad Chicken Dinner seminars or whatever, wherever you're at, if you're in someone's office, they're only showing you one product. That's garbage. As I said, at the time of this podcast, there are less than 20 companies that are offering it currently, but we're going to quote them all. So let's go backwards and talk about that just a little bit more. Let me go through it again. There's 2 types of these confinement care enhanced benefit payouts. There's the ones that when you're in a nursing home, i.e. confinement care, you're confined to a nursing home. And then there's ones where you can't do the ADLs, the 2 of the 6 ADLs, clothe yourself, feed yourself, bathe yourself, those type of things. basic things. So it's either one of the two. So you got to be aware of which one it is, which one you want. Both of them require you to kind of jump through a really bad healthcare hoop, right? You either can't do 2 of the 6 daily functions or you're in a nursing home. Those are both tough qualifications, right? When you're at that stage, that's tough. But you got to be aware of the rules in place so that the income stream can double or increase however the formula is for that specific carrier or the highest contractual guarantee that we can find you. You got to be aware of those rules. Now, we'll follow those rules to the T. We have a system in place where we're very, very automated, computer-wise, and we will not miss the day. Let's just put it like that. You don't have to keep up with anything. If you're a client of the Annuity Man, we're going to take care of that. We're going to be in touch with your family. We're going to be in touch with your spouse or kids, whoever that is, and we're going to make sure that we're going to hit the day on the head, period. But also remember, too, that if the account reaches 0, the accumulation value, then the doubling stops and it goes back to the original lifetime income stream. And you can't even start the doubler if you're at 0 already. Because remember, when you're taking income from an annuity, it's a combination of return of principal plus interest. So you're drawing down. In English, that means subtraction. You're drawing down from the account both sides of the ledger, the accumulation value part and the income rider part. And so it could be at 0. And that's fine. That's the transfer of risk. The annuity company's on the hook to pay even if the account's at 0, right? That's the transfer of risk. That's the reason I always say there's no ROI until you die. So I know I've covered a lot today. Just remember, with these confinement care riders and enhanced benefit payouts, when you get sicker, you get your money back quicker. That's okay. Also remember, they're guaranteed issue. You don't have to take any tests, no nurses show up, no blood tests, no medical tests, no medical records. It's guaranteed issue, which is good if you cannot qualify for traditional long-term care, which is still the best coverage out there. And also remember, there's only 2 types, primary types, that are available with the less than 20 carriers offering. There's the confinement care type and the ADL, the daily living, 2 of the 6 daily functions of life. You can't do that. So there's those 2. You got to find out which one. We have to talk about which one might be better for you or better for your family. Neither is better than the other. They both enhance the payout when you get sicker. They both are guaranteed. They both are transfer of risk, but you have to be aware of both of them. Just don't accept somebody saying, well, it's free long-term care. It's not long-term care. It's confinement care, enhanced benefit payouts, whether you're in a nursing home or you can't do 2 of the 6 daily functions. I'm hoping that this is a lot clearer to you. I'm hoping that you will feel comfortable enough to ask us for those quotes, because we will run them for you. We will send you specimen policies if you request, so you can read those. We will send you the income rider addendums to read if you request those. We will send you applications to read if you request those. Because if you're working with the Annuity Man, and my clients that are out there are going to nod their head when I say this, you're going to make your decision on your terms and on your time frame. There is no pressure. The only urgency when it comes to annuities with us, with me and my team, the urgency is this. You need to fully understand what you're buying. You need to fully understand the strategy for the limitations and the benefits, both, not just the benefits. As I always say, don't buy the sizzle because you're going to own the steak. Don't buy the annuity dream because you're going to own the contractual reality. And the contractual reality of these enhanced benefit payouts are good. They're not perfect. Nothing's perfect. But you have to understand how they work. So with that, I really appreciate you joining me. And in addition to this, I've done YouTube videos on this subject. All right? So you can go to Stan the Annuity Man at YouTube. Just type it into the search bar, and you'll see all my videos come up. I'm doing one a day. I do one a day, Monday through Friday, and I've done a lot on this, kind of this issue. And I'm going to do more. So you can go there. I'm also writing every day for a lot of the major platforms. One I'm doing a lot for right now is TheStreet.com, great company. I'm doing something for them. I'm writing a lot for them. So you can always go to theannuityman.com and reach out to us, and one of my team or myself will work with you one-on-one with this situation. This isn't something that's do-it-yourself. This is something you need an expert. This is something that you need an absolute expertise to tell you the good, the bad, the ugly, the truth, the limitations, and the benefits of what you're looking at. so you can make a decision, because this is tough. This is a hard one. We're all facing getting older. We're all facing getting sick. We all have had family members we've seen this happen to. I recently went through this with my father. It's not pretty. The end of life is not pretty. But if you're a planner, there are options out there for you. There are guaranteed issue products like this that are out there for you that could possibly help lessen the financial blow for your family, a transfer of risk. And in a lot of cases, it makes sense. So I encourage you to at least get a quote and reach out to us at theannuityman.com. And once again, I really appreciate you joining me, Stan the Annuity Man, on Fun with Annuities. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.